Good evening, everyone. Thank you for joining us today. So, I'm Shama, Manager, People Solution at Kadel Labs, and it's my pleasure to welcome you to another exciting session in our Expert Insight series, Scale Tech Talk. At Kadel Labs, we are committed to sharing knowledge that drives innovation and transformation. Through this series, we bring insightful discussion from industry leaders to empower professionals like you with the tools and understanding needed to stay ahead in an ever evolving landscape. Let me briefly introduce who we are. Kadel Labs is a first of its kind venture studio in India, a global software technology incubator with a synergistic blend of IT services and SaaS products. Since 2017, we've grown organically to 180 plus employees, served 200 plus customers worldwide, and built a global presence with operations across multiple regions. Our expertise spans across diverse industries such as fintech, health tech, edtech, retail, insurtech, manufacturing, and telecom. So we specialize in delivering innovative solutions in cloud engineering, data analytics, software development, and AI services. At Kadel Labs, we pride ourselves on being a people-centric organization, encouraging creativity, free-flowing communication, and continuous innovation to deliver impactful products and services to our clients. Today's session is a part of our ongoing effort to address pressing technology challenges and explore transformative solutions. We are thrilled to introduce the topic AI and machine learning for capital markets and algorithmic trading. The capital markets industry is transforming as AI machine learning enables smarter, faster, and more efficient trading decisions, enhancing predictive analytics, driving innovation, reducing risk, and uncovering new opportunities. So, we are happy to have Praratha Arora, a distinguished expert in AI and financial markets, sharing her insights with us today. A quick note to the participants. We encourage you to actively participate by dropping your questions in the chat or Q&A section. So we'll address them during the interactive segment at the end of the session. Once again, thank you everyone for joining us today. Let's dive in and uncover the transformative power of AI and machine learning in capital markets and algorithm trading. Over to you, Praratha.
Okay. Thank you so much, Raman, for this introduction. So, hello everybody. We'll be talking about what AI and machine learning are doing in the capital markets today and what is the use of them in algorithmic trading. So, I'll be the presenter for the day and I'll be talking on this topic. So, moving further, I'm an alumnus of BITS Hyderabad. I've done my master's from there and I'm currently associated on research there. I'm working on two research papers. Yeah, so that's majorly about me. Moving further to the topic. So AI and ML in machine learning basically are specifically used in algorithmic trading, capital markets in three domains in algorithmic trading. One is high frequency trading. So HFT is something which traders do every day. In split seconds, they are making trading decisions, which is being very much optimized by machine learning. So that is one of the use cases. Other than that, predictive analysis, we take the data, previous historical data, and then we make price predictions, which is second use case in algorithmic trading. Third use case is quantitative trading, which is based on higher GPU ends, basically, which we take complex mathematical models and we create trading strategies out of it. So that is one of three of the algorithmic trading applications. Moving further, we use AI and ML in risk management. So we check whether there is a credit risk assessment. So whenever we are giving a loan or we are giving a borrower some amount of money, so we check whether the lender, whether the borrower can return the money to the lender or not. So that kind of assessment is done using credit risk assessment. So that is done. Second is market risk assessment. So this is basically we check whether the market is volatile or not and what are the potential losses. That is the second use case. Third one is fraud detection. So what kind of frauds we are like there are multiple frauds which are going on in today's market. So that is being enhanced by using machine learning now. So they are being automatically detected. So any kind of anomalies there. So that is being detected using fraud detection by machine learning. So these kind of use cases are being dealt with using AI now. We'll get into details further, but these are the use cases now for as of now. Next comes is portfolio management. So whenever we try to invest money, so what kind of asset allocation we need to do? Where are the like best investment policies are there? So those kind of advices are also now provided by AI. AI agents are there which can help you as a consultant to get your money invested in a right manner. So there are robo advisors currently which exist. There is a portfolio diversification which can be done using AI, and definitely sentiment analysis is one of the basic use cases. So you can check what is the market status, what is the social media sentiment currently. So that can be checked using sentiment analysis. This is the third use case of AIML. Fourth one is market making and liquidity provision. So this is basically, it comes under two categories. One is order book analysis, second is liquidity prediction. So order book analysis is nothing but we check for the support and resistance. These are the terms which we use in market lately. So we check whether when to invest, when to take out the money. So those kind of order bulk investments and what kind of imbalances are there in the market, that is being predicted now by AI. And liquidity prediction, whenever businesses have to keep hold of the money or they have to let the cash flow. So those kind of liquidity predictions are now made by AI. This is one of the other use cases. Yeah. So moving further. Now we have compliance and surveillance. Now, what kind of, there are, as I mentioned, there are multiple frauds now. So there is a need of surveillance and compliance following. So that is being again used by AI. So we have regulatory compliance where we can automate the trading activity monitoring, which is earlier, which was done by human intervention. Now it is being done by AI agents, and insider trading detection. So there is like multiple frauds like Harshad Mehta fraud we know about. So any kind of insider trading which is being done, so that is also now being detected by AI agents. Okay. So now moving on to the technical part. So we know the applications now. Now how all of this is being done. So there are various key technologies which we are using. Specifically, we talk about there is time series analysis, which we use for predictions now. Time series is basically based on the previous historical data we take and we predict using that data to predict the further profit and loss kind of situations. Now we have NLP as well. NLP is something which we take the financial text and we like extract insights from that. Sentiment analysis similar to NLP we use. So there we use words, sentences to get and make predictions basically. There is deep learning. Deep learning is basically we use for pattern recognition. So any kind of previous historical patterns we have, those are being repeated. Any kind of neural networks which are being generated is done in deep learning. So neural networks is specifically used for like LSTM models are there. There is long short-term memory models. There is XGBoost. Those kind of models are used for predictions. Then we have reinforcement learning. It's a very basic award process. So whenever the model is performing better, it is being awarded. Whenever it is not performing better, it is being not being rewarded. So those kind of reinforcement learnings are done for adaptive trading strategies. Then we have big data analytics. Basic, we have lots of data now which is being generated. So we are integrating the structured and unstructured data to get some real-time information out of it. We use Hadoop, Spark, those kind of techniques. Then we have cloud computing, which is specifically for deploying part of the machine learning models. So we use GCP, we use AWS, we use Azure kind of clouds so that our model is performing on a very large scale. It is scalable. It is having a good latency rate. So cloud computing is used there. So that is being used. Yeah. These are the techniques we use initially. It's a very basic overview. We can get into details later, but this is majorly about it. Now, for an example, we talk about how AI-driven strategy is being like what is a workflow, what is a data flow basically. So we'll talk about starting from data. Like we need to have a large amount of data for better predictions. The higher the amount of data, the better predictions would be. So initially, we need to gather the data. So data collection is the first step, key step, and we can either go for some historical price-based data we have, whatever was the price of the share initially. Now, what it will be in the future, that can be predicted from the previous price. What was the volume of the data? That also depends. If it's a high volume, as I mentioned, it will be a better prediction. And there are economic indicators, which we have liquidity predictions, we have those kind of indicators. So those are being used. And yeah, so initially we'll be gathering the data. Moving on to the feature engineering part. So we'll be taking some insights from those data and we'll be gathering few features. So there are like moving averages, which is a very key important feature for time series analysis. We use MA. There is a model, ARIMA model, which is specifically used for moving averages. And so those kind of feature engineering parts are done there. Then we have volatility prediction. So basically what is the risk in the data, in the basically market. So those kind of volatility predictions are done in the feature engineering part only, and sentiment scores are calculated. So this we'll get into detail. Then we have model development. After this feature engineering is done, then comes the model development part. So as I mentioned, there is LSTM and XGBoost. These are the core models which we use. So LSTM is a deep learning model, which is long short-term memory. XGBoost is again a boosting model. These are the basic models which we use when we are developing any kind of time series based model. So this we used, and these are specifically used for training and validating the historical data. Moving further, we have back testing. Now, when we have created the model, we need to understand whether what data we have given as is it performing good or not. So those kind of evaluation performances are done in back testing. There are techniques like accuracy measurement, prediction, precision measurement, recall measurement. Those kind of techniques are used here. Then deployment comes. So as I mentioned, there are cloud platforms. Now, since if it will be a big model, then a higher amount of GPU is required for deploying the model in the real-time algorithmic trading kind of platforms. So that is done. And finally, the risk management, the monitoring part comes up. So if any limit exposure or any adverse market movements are there, so to protect from that, we use risk management. So this is the whole technique that we use. Now comes up what are the challenges like we get when we are creating a model. So sometimes what happens is the quality of the data is not adequate. So the model won't be predicting up to the mark. And for that we have oversampling techniques. We need more data. So that is done. Then we have model interpretability. So model might not be balancing the complexity with the need of transparency. We might not be getting the very accurate output since it's getting a complex model. So the complexity can reduce the accuracy as well for the model. So to improve that, better model can be used in that case. Then we have regulatory compliance. So it is important to adhere to the financial regulations ensured by the government, and so that is to be checked. Then we have market dynamics. So since it's a very volatile market, so there is very much change in the data. So that change, how it fits with our model, that also needs to be checked. So we need to adapt it. There should not be any case of overfitting or underfitting whenever there is a dynamic change in the data. So that needs to be checked. So these are the few challenges which we have. So that's about it. Thank you. Any questions, you can please put it in the chat box.
That was indeed a good session on capital markets. So we have two questions here. So we have it one from one of our professionals who has joined the webinar. So they're asking which areas in trading or finance are likely to benefit most from AI in the coming years.
Okay, so I would say all of the areas, but as I mentioned, there is a specific, we have liquidity, like what is the liquidity flow and what is the risk management. These are the two core areas. Risk management is one of the core areas since it is being used by many industries now. We have American Express, we have other like Visa, we have all these financial based companies which are specifically working on risk management. So this has been very much improved because of AI. Since now no much manual work is left, it is majorly done by the AI models. So risk management is one of the areas, and liquidity flow, like where the businesses should invest, how much cash they should hold, and how much cash should be in the flow. So that kind of check is now like that advice is now being given by AI models. So that is also very much improved.
Great. All right. We have students also joined our session today. We have one question from one of our students who has joined the session. So they're asking what skills should students learn to work with AI in financial markets?
Specifically, I would say there are various courses. First of all, you should be aware about very basic terms of finance markets as well. What is the tax funds? Those kind of basic understanding of the finance market. So there are various courses on Coursera. There are various MBA-based courses as well. So that can be done initially. Secondly, I would say more understanding of data science. So statistics. We have machine learning. We have AI. Now we have generative AI. So those areas, specifically going order by order, that can be done.
All right. Right. All right, Radhika, that was a really indeed insightful session. We thank you for joining in today, and thank you everyone for joining the session and making this a successful one. See you in the next webinar.
Thank you.